Merry Christmas, guys. Santa is here with a new video. Santa Claus Omime is here with a new video. So, but before we get into the video, let's quickly exchange, pleasantries like, how's your year? How was my year? My year was crazy. There's a lot of ups and downs. I had some level-headed periods, but overall, a lot of progress was made. Let's transition this into the new year. How's December price action? All of these questions you can just quickly, answer me in the comment section. How was your year? How was December price action treating you? With that being said, we are going to be talking about gold today, and I target like a gold play as ahead of 2026. You can see that technically we had different periods where gold was in a lot of bullish, uptrending markets this year, and there were sometimes like particularly now where gold is just very very sideways. You can see over here that the market has been sideways. I've taken about 2 losses on this particular market right now. Sorry, within the last a week or two. So it's been a sideways market between from December. So nothing has really been going on. But aside December, I think we had a decent year on gold. I actually picked up on gold quite late, not very early into the year. I think I was in the market within this trendy period between here and here. I was in the markets within this period, so I capitalized on the market within this area. But prior to that, I only just came into gold around maybe say September. But before that, I wasn't really trading gold because I had an issue with gold. Let me not say I had an issue with gold. Like me and gold had like a beef. So like gold was the first pair to take like 1K from me the first time I started trading. So I have this like toxic relationship with gold. But lately, I went on, worked out my strategy, got solid in my own thing. So I've been able to start trading gold even more confidently. But aside that, I'm looking forward to another good, play on gold next year because you can see gold is very, very trendy. So it's just a consolidating market now. So we'll just watch the levels, plan and pan out everything and see how we can capitalize off gold in 2026. That's a lot of ramble. So the purpose of this video is to show you how I was able to capitalize this win on gold this year. These are a couple of wins I've had this year. This, and this. So I'm also going to show you the losses like this and this. And these are the periods where I wasn't very solid. I told you guys I came in, you can see this is August. If you check what I said, within August, September, I came back in gold. So I think this period I had to, be in tune with the market. You understand what I mean by, if you're a trader, you understand what it means to be in tune, like being in sync, being in the zone with this pair. So I was in the zone with gold this period. So, 1 second, please. Yeah, so but I took a loss around this time because I wasn't very, very in tune. But that doesn't mean you can't take a loss anytime. But I wasn't in tune with the market this period. So but I was able to cap off the wins here, here, and here. So how was I able to do this is what I'm going to be showing in this video. So let's clear all of this off and get cracking with the play. So we're going to be understanding how to top-down analysis like gold. We're going to be understanding here how to trade gold going into 2026, what we'll be looking at, how we are going to be mapping out our charts, how we are going to be doing our daily buyers, weekly buyers, and everything in between. So let me clear all of this and have us started. So we're going to, first off, let's do it like this. So currently on gold right now, let's do top-down analysis on gold right now. So currently on gold right now, this is the monthly time frame. Let me zoom it in. So this is the monthly time frame here. You can see that we are extremely bullish. So if we go to the the line chart. I use the line chart a lot, so you can see we're extremely bullish here. So if we go on the weekly, so you can see that we are still bullish on the weekly. Look at we have the last lower high that was created was here, and the last higher high that was created was here. If you understand what structure means, how this is how structure moves this way. So this low taking out this high, so creating a new high. This low was created so that we can create a new high. This is basic structure. So okay, basically we are bullish on gold. You can see this was the last low that was created, and this was the last high that was created. We have no new high above this high, and we have no new low below this low, which makes us bullish on the weekly time frame. So if we come to daily time frame now, so we're doing it a top-down analysis from the higher time frame to the lower time frame. So if you look at the daily charts now, what do we have? So if we're going to take this from here, let's zoom it out. So price has been bullish between here. We took out this high, so a new low was created. To take out this high, which a new high was created. New highs, low, new highs, low, and a new high. So as soon as we took out this low here, we became bearish on the daily. Remember the low. This is low here. As soon as we took out this low here, we became, let me take this off. We became bearish on the daily. I need to see what I'm doing. So as soon as we took out this low, remember there was a high that was created here. We had this low here. We took out this high from this low that was created here. We took out this high and created a new low. We created a new high here, new low, taking out this high. So as soon as we took out this high, on this time frame, which is the daily time frame, this particular low here is the higher low, and this particular high here is the higher high. So we're gonna do HH. We're gonna do LH. We're gonna higher low, HL. So let's write this down. So HL stands for higher low, and LH stands for lower high. HH stands for higher high, and you can solve the last one yourself, so you should know what that means. So that's LL. It now stands for lower low. So this is the higher low that was created, and for us to have a higher low, we need to have a higher high. So this is the latest higher high created. So as soon as price broke below this, the character has changed. We are now bearish on the daily time frame. Remember, we are bullish on the weekly time frame. So we're doing the top-down analysis first before we discuss what's the plan moving forward, trading gold daily as a day trader or as a swing trader. So let's keep going. So as soon as price change character, so now this becomes the new lower high. And this becomes a new lower low. We became bearish. Now this is the new lower high. This is the new lower low. Price is predominantly bearish on the daily time frame. So if we keep doing that, this is another new lower low, lower high, and a new lower low is created here. Sorry, this is supposed to be LL. So are you guys still with me? So yeah. So now imagine as soon as price broke above this particular high here, character has changed. So you can see that we shot above this particular high. This was the lower high before. So we have a change in character. So now we're now bullish on gold. So this is the new higher low, and this is the new higher high. So if we keep doing that, new higher low, a new higher high was created here. So there's a new higher low here. There's a new higher high created around right above here. right on this particular point here. So we are bullish on gold at the moment. So that's why you see I have bullish on the weekly, bullish on the daily. Now let's go to the H4. If we come to the H4, if you use the same mechanism on the H4, so let's go to the candlestick. If you use the same mechanism on the H4, you can see, let's just say this was when price was at this high, so we took out this high, so we came back, take out this low. We use the line chart, so we take out this low here, became bearish. So we became bearish up till here. We pushed bullish here and we became bullish. So we created a new low here and a new high around this level. So you can see price has steadily been creating, let me zoom this out. Price has steadily been creating new lows, new highs, new lows, new highs, new lows, new highs, which changed character for a bit, but price also changed character right above here. If we take this candle, if we go back to the candlestick, you can see there was a low created here and we had a shift in character. So there's a new low here and a new high created. So this is a 4-hour higher low and higher high right around this level. So price is bullish on the 4-hour time frame. So that's how you break it down to the 15 minutes time frame to find entries and so on and so forth. But at the moment, you can see that we're just creating a level here. We had this rejection around here. We also had another rejection candle around here. Also, we have another rejection candle around here. So at the moment, it looks like we have, like a support zone around, what price level is this? Maybe 41200. We have a support zone created here. I don't know what's going to happen, but at the moment we are very, very much in a consolidating market. So I just sit back and watch the levels as we transition. Well going, guys, if you have been able to get to this point of the video, I want to say thank you for watching the video. Thank you for being part of this community, and I'd like you to do just one more thing. Just click on the subscribe button like right now. Thank you very much. Please go and watch a video. Bye. Into either a bearish market or a bullish market. So for now, that's how you're going to top down analysis gold moving into 2026. So if you want to go to the smaller time frame, you can move down all the way to the smaller time frame. Let me pick gold here. Let's take this out. If you want to go down to the smaller time frame, you can see how price is changing characters. But on the higher time frames, we are consolidating, but price is just changing characters between being bullish and being bearish in the 15 minutes time frame. On the 1 hour time frame, we are in a sideways market, the way it was on the 4 hour time frame. You can see we're in a sideways market here. So basically, you can go from the monthly time frame to the weekly time frame to the daily time frame to the 4 hour time frame to the 1 hour time frame and to the 15 minutes time frame if you want to day trade gold on the 15 minutes. But if you want to trade it on the 4 hour time frame, all you need to do is find areas. So this is the 4 hour now. Okay, stick with me. Let's quickly do like 2-3 back tests on how you can be analyzing gold on the higher time frame and trade it on the 4 hour time frame. Then how you can be analyzing it on the 4 hour time frame, 1 hour time frame, and take your entries on the 15 minutes time frame. So let's just do a random. It's a random bar, so we just pick random. Where it did take us to, this is January, far back as January 2016. Oh, this is the 1 hour time frame. Okay, far back as January 2016. Now let's see if the strategy we are going to implement in 2026 would have worked in January 2016. At this time, I wasn't even trading. I didn't even know what trading is. So let's see. So we'll go back to the weekly time frame and figure where we are in the market. That's the first thing you need to do. Figure where you are. So from the outlook here, I can see that we are bullish at this point and we changed bearish between here. I clone this between here and here, and I don't think gold has for anything, for us to create a new structure, a new structural high or new structural low, we need to pierce the previous. So this wasn't pierced before, and this didn't come. This just came close but never took it out. So we are bearish on this market. I can see on the weekly time frame that we are bearish. On the daily time frame, it is evident that we are bullish, because from here we went for, let's say we do it from here, went from here, we created a low here, we broke below this low, we came down this low, and we kept going down. So this was the most recent low created, and we had this high, take it out. So we went bullish a little bit, came back, we took this low out with this candle. So I like to use the line charts because you see it just reduces the noise. You can see this was a support zone, so we just took it out and we went a little bit bullish here, bullish, and we came and we took out this particular high here to create us a bullish market on the daily time frame. So we are bullish on the daily time frame. So let's make this green, let's make the weekly time frames. Remember, we're going to let's just backtest maybe three entries. So we're going to make this red, we're going to make this red, so we know where we are. So this is the weekly, so the red will represent the weekly and the green will represent the daily. So this particular area we are here, this is going to be the green. So clearly on the daily time frame, we're bearish on the weekly, bullish on the daily. Now see, this is where confluences come together. We are building confluences. So now we go to the 4-hour chart to figure out where we are. On 4-hour, what can I see here? I can see categorically that when price pushed from here, we're going to make this black. When price pushed from here to here, to this high here, that's the daily high here, I've not really seen any major change. So basically we didn't take out this high to create a new high, we haven't taken out this low to create a new low, so we are still bullish on the 4-hour time frame. So that gives us a good bias. So at the moment we have 2 time frames in our favor. The H4 is bullish. We have 2 time frames in our favor. We have the daily and the 4-hour time frames are both bullish, while the weekly is bearish. So let's see if we can get a bullish, we have a buy bias at the moment. So remember, we're just going to be taking a few trades and let's see the results this has to offer. This is far back at 2016. So let's test and see if our strategy will have worked in 2016. That'll be like 10 years ago or 9 years ago. So let's see. We didn't breach this. If we go back here, we can see that we didn't breach this. So we are still very much bullish. We neither took out this high or we took out this low. So we're very much bullish still. So let's keep going. Hold on. So you can see a level here. If we cut back, if we cut this off, and we have this level here, broken below this level, we'll draw a fib from here to the last high. We are on the 0.78 extension. This is 6 a.m. in the morning candle or 10 a.m. in the morning candle. I would actually be interested in buying this pair. My stop loss right below this level here, and let's see if gold is bullish enough to give us a 1 to 2 hour on this particular trade. So I think gold was generous enough to give us. So I can also see another trade here. This is another trade opportunity here. So I'm gonna have to replay this a little bit so you see the reasons why. So if we go from here, draw a fib from here. Remember, this fib was done. First off, I think I moved too fast. So remember, this was where we are at first. I took this off. Why did I take this trade? Remember, we are bullish on the week, we are bullish on the daily, we are bullish on the 4-hour time frame. That's one confluence. Now we can see that this was the low that was created. If we go to the line chart, this was the low that was created, and this was the most recent high. So this serves us pullback to 78 extension. As I saw that's a green light for me to go in a trade. Another thing I'm looking for is like a double bottom. So you can see that this was evident as price came to this level, is was stuck to this level. We have buyers interested here, and we can see that price came back to around this level, pulled back into this level. So I was interested in you know going long on this trade. That was the reasons. So remember, what we had was, I don't want to speed this too much because a lot of you need to catch up slowly. So we had daily and 4 hour, daily and H4 bullish. That's one confluence. We have a pullback to 0.78 extension. We have the double bottom. So these are a lot of confluences these are just a couple of confluences that you can add, you need to see to be able to capitalize. Then you can see here we have an evening star, multiple evening stars. So evening stars. So you see, that's all I saw. So I needed to point this out because I've been doing this long enough to be able to see it, and I needed to point this out for you guys to see what I saw for me to, take this trade. So gold just went his way. So you can see this was a random pick. So while I'm looking for a trade here, I've already identified this level. If I go to the line chart, so we are done with the first off, we are done with this trade. Let's be done with this trade. So you can see, if I go on the line chart, you can see this was a pullback from this swing high. So all you need to do is just draw it from one of the swing, and you can see wait for price to come back to that level. Let that level serve as a demand zone. Multiple rejection. What time is this? I'm waiting for 6 in the morning London session. I'm interested. So whatever price draws from here now is none of my business, because all I need to do is just participate, see my keys. So from here, what have I seen? I've seen a double bottom formation forming here. I've seen a swing high, retracement to the 61 extension. And that's enough for me. So let's see if price delivers. At the moment, what do we have? We have a 2-hour trade. And that's okay and steady. So we're gonna be just taking one more trade and see. This is how you can work it into 2026. Just easy steps, higher time frame to a lower time frame. You can do the same thing from the 4-hour time frame to the 15 minutes time frame. I think this video is already too long, so I'm going to just quit this video on the last back test. So we have 2 wins already. So all you need to do is just go test and test and test. So at the moment now, you can see that price has pierced the weekly high here. So if I go to the weekly now and do this, you can see that we're already very much bullish on the weekly. So you can correct this and take this off. So we're no more bullish, we're no more bearish on the weekly. So now we can go back to the 4-hour and keep looking for opportunities to go bullish on gold. You can see far back in 2016, gold has been something that is very, very much bullish if it wants to really move. For me, I've not really seen any opportunity. The last pullback was here, but I don't really classify one candle as a pullback. Understand? You can see price, I didn't have a double bottom, so I'm not really interested in anything at the moment. Some people will have said, oh, why didn't you just hold the trade and just hold it? I don't know whichever trade is going to, whatever trade is going to do in the future. All I need to do is just follow my plan, and my plan going into this trade was just a 1 to 2. So that's all I need. So I'm still looking for a pullback, something good. I think I'm seeing something nice here. You can see there's a swing low to a swing high. If you go on the line chart, You can see how clear this is. So I can see price is still on the 78 extension. We have a double bottom form there. I think that's enough confluences for me. I've seen a double bottom here. I just need momentum to take me to cover up this, this high, this candle, this bearish candle here. So the price is able to cover that. My stop loss right below this week. I've played my part. It's all up to the market to do what it needs to do. If it's going to deliver, good. If it's not, good. Let's see what does the market do. Let's keep this P. It did. Not fully yet. This is a long time. Technically, I probably will have closed my trade at a 1 to 1.8, but basically, you get the point of the video. So this is what you can take into 2026 ready. Have your paddles or whatever it's called, your fish, your hook, everything ready for the market to deliver opportunities. You can see we went randomly to 2016 and we're able to do a 3 for 3 back test. This doesn't mean it has to work like this, because this particular strategy also faces losing streak. So the reality of the market is not what sometimes backtests can really prove. You have to be in the game to understand the game. So with that being said, this is all you need to use for gold, or you need to capitalize on gold next year, because we're going to have different cycles next year. We're either going to have a bullish cycle or a bearish cycle. Whatever, all you need to do is just go from the higher time frame to a lower time frame, have the confluences in place, have your markups right, and jump in. The market will do what it's going to do. With that being said, don't forget to like, comment, share. I think this video is already a long video. And subscribe. We really appreciate the subscriptions. I think we are currently at about 150. So we are grateful for how far we have come. Don't forget to drop a comment if you need anything, if you need any help with anything as we continue to grow as a community. And I'll see you guys in the next video. Bye for now.